So first, what is a stock chart? A visual representation of a price action over time, including line charts, bar charts, candlestick charts, mostly used. And that's what's mostly used by traders.
Yeah, so on the chart, you have different time frames that you can select from. So you have the 1 minute, 5 minute, 10 minute, 15, 30, 1 hour, 2 hour, and 4 hour. And then you have 1 day, 1 week, 1 month, and 1 year time frames. Okay. And the bigger the time frame, then the stronger the signal is for that chart. And another thing that you need to remember is that when looking at a candlestick, that is the actual candlestick for that time frame. So if it's a 4-hour time frame and you see one candlestick, each one of those candlesticks represent for that one for time frame. So that's either a 4-hour, or if you're on the 5 minute, then that's a 5 minute candlestick. Or if you're on a 1 day, the daily, then that one candle represents what it did that day. So please remember, the higher the time frame, the stronger the signal.
Now, understanding candles. The visual annotation of candlesticks shown here. So you got the open, close, high, and low. So your high is going to be the top of the wick. This right here is called the wick, like just like an actual wick on a candle. And then that's about the top of it's going to be your high. Right here at the bottom of the wick, right there, is going to be your close for the day. Then you go down right here. This is where it's going to open at the bottom of the wick. This is your open, and then this is going to be your low for the day. So the green candles mean when you see a green candle on your screen, it means this bullish is going up for you. If you see a red candle on your screen, it would be the same candle, but it would be red. It means it's bearish. That means it's going down for the day. So we got some of the patterns that we include for you in here, which is going to be an engulfing candle, a hammer candle, and a doji style candle.
Yes, and just a reminder, when you do see a red bullish candle, bearish candle, then certain things flip. So instead of this being the closed, then this down here would actually be the close, and this will be the open. So when the stock market opened for that day, or for that 5 minute time period, or whatever the bar you're looking at for whatever time period, the top of the bar, the top of the square of the fat part, this top is open, and then it went down for the day, all the way down, then came back up and stopped here, and this is where it closed. So as David said, we're gonna go ahead and go into this understanding the stock candlesticks. Here's a few patterns to help you understand the direction of where the chart may be going. Basically, is where there may be a turning point. So either maybe a turning point going up or going down. So you have the engulfing candle pattern, where the actual little doji, the little candlestick is being engulfed by the big one. And then, of course, you have the hammer, where you have two regular sized candles on both sides, and then you have one in the middle that looks like a hammer. So it's just like what it says. Right here are just some more signals that can help you along. So we have the long red candles, short ones, the short candles, and then this goes so on and so forth. We have the doji candles, which are basically it has a very little body, but very long wicks, and it kind of lets you know it's about to change your direction. And then also, yeah, the hammer candles. If you see this one, it was going down, and then it decided to go up. And then the same thing, if it was the opposite and it was a red candle, that means it was going up, and then now it's about to go down. So on and so forth. Please make sure you take your time to learn some of these patterns you may find on a chart. But yeah, definitely make sure you check a chart and learn how to find these signals on a chart. This is one of my favorite, the morning star and the evening star candles, as well as the engulfing candles. It kind of lets me know that, hey, it's about to flip. So this one, or the bullish Abandonment baby. Yeah, if you see those candles on there, then definitely to be a change in pattern. It may be a good time for you to go ahead and jump in.
So next we're doing moving averages, which is a description, smooths out price trends over time. The types, we got a SMA, simple moving average, equal weighing, and then it's a EMA, which is exponent moving average, more weight to recent price.
Mm-hmm.
The key lines, the 50-day moving average, which is a medium trend, a term trend, and then the 200-day moving average, which is a long-term health trend.
Yeah.
So the patterns, you got the golden cross, which is a 50-day movement, 50-day average moving average, crosses above the 200 moving average, which is bullish. And then we got the death cross, which is the 50-day moving average, cross below the 200-day moving average, which means it's bearish.
Yeah, so now we have the relative strength index, which is the RSI. And sometimes you may hear people say that, hey, they may try to tell you to get into a stock that's very popular at the moment. You should really check their RSI to see if that stock is being overbought at that time or is it oversold. Because you may be jumping into something that's overbought, and when it's overbought, that means it's about to start falling. So the purpose shows the overbought and oversold conditions. The scale is 0 to 100. Overbought is 70 and higher. Potential for reversal to go down, and then oversold is 30 and below, and that means that there's a potential for a reversal. But here's a good tip: look for divergence between the prices and the actual RSI.
So now we're going to do the MACD, which is the momentum and trend strength. Full movement, full name, moving average, convergence, divergence. Components are the MACD lines, the signal lines, and the histogram lines. The interpretation, bullish crossover, MACD crossover above signal, bearish crossover, the MACD crosses below signal. The histogram shows strength of the move.
All right, so now I'm going to talk about the value, the hidden truth. That is such the hidden truth. Description. So it measures how many shares are being traded at that time. Either you have a high volume, which equals conviction. Use it to help confirm what's about to happen. Then you have breakouts. When you see strong breakouts, it usually helps you validate. You should be able to look at the volume and say, okay, hey, I see a lot of volume. That's the reason why it's breaking out, because there's a lot of shares being traded at that time. And then also there's indicators for reversals. And then no volume, no movement. Don't trust those. Okay, don't trust those breakouts. Don't trust those at all. And don't trust breakouts without a volume confirmation.
Next, we have the bonus indicator, which is our Bollinger Bands. This is a description of volatility bands across the price. So the middle lines is the 20-day moving average. The outer bands is the 2 standard deviations. The squeeze is lower volatility, which means it's going to explosively break out. Explosive breakout is coming. It's high, but uses volume to confirm.
Yeah, so you gotta know the Bollinger Bands. Hold on, I'm sorry, I think I missed one. No, it's exact same. All right, so put it all together, which is vitally important. So we're gonna go ahead and use one of the charts so we can help show you exactly what we're talking about. So we're going to highlight the moving averages, the crossovers, the RSI confirmation, volume, as well as the MACD alignment. All right, you guys, I'm going to go ahead and start to chart for you and show you some of the indicators. So right now I am actually on Webull. If you go to these 4 little boxes over here, then you'll be able to see the indicators. So you click right here on indicators. Right now I have BOLL lit up. I just took them off. BOLL is the Bollinger Bands, okay? And to go back to indicators. So we talked about the Bollinger Bands, and as you can see, looking at the daily chart, that the stock normally stays within the Bollinger Bands. It normally stays within them at least 95% of the time. And whenever it does come back out, as you can see right here, it popped right back in. Here, when it was about to come out, it was thinking about it, it decided to go ahead and go the other way. Here, when it dropped down to 195.09, it said, oh no, we're outside the Bollinger Bands. I mean, that's not what it said, but that's what it meant. We're outside the Bollinger Bands. It popped back in within 2 days and stayed within the Bollinger Bands for a very long time. So the Bollinger Bands are a great indicator that, hey, this stock is about to go in the opposite direction. And you can get these Bollinger Bands on the weekly chart, on the monthly chart, quarterly, on the quarterly chart. So basically you can get them on every chart. They'll be right there waiting for you. But definitely they stay within those Bollinger Bands. And then you can also get them even on like the 15 minutes. So if you're on a smaller time frame and you're like, hey, I'm trying to day trade or I'm just trying to swing trade and I really want to use the Bollinger Bands to let me know, am I staying within range? Wait for a good breakout of the Bollinger Bands, and then you know it's going to go exactly the opposite way. So this day that it decided to pop all the way out on this 4-hour chart where it popped out of the Bollinger Band, it went all the way up to 215.73, it looks like. And as soon as it did that, then you should already know that next bar is going to be trying to find its way right back. So these are great indicators to help you know which way the stock market is about to go. For the RSI, right here at the bottom, you'll be able to see that for Apple, it's right here in the middle. So it's not overbought, it's not oversold. Right now, it is around 53. And so that is, of course, less than 70, and that's more than 30. So you got to know that, it's just in a good, healthy place if you did decide that you ever want to buy into Apple. Another indicator we went over, we'll take off the other ones, is the MACD. And it kind of shows the same exact thing, where it indicates to you that, hey, it's kind of high, so I had to turn around and go back down the other way. It's right here at the bottom. But definitely the signals for the histogram is on there. But as soon as this goes down and crosses, it will be on its way right back up. So the histogram definitely tells a good story of what's going on with the stock. Let's put the histogram on the daily chart. So you can see right here at the bottom how it reflects. Nothing like that. Hmm. No, I thought the other one was EMA.
Oh.
Hey, honey. How you doing? It's okay. How's it? It's good.
Any crazy stuff going on? That's your regular day. Good though.
Mm. Um. All right, and now we have the EMA. The actually pauses. All right, you guys, and now we have the EMA. So the EMA, as we stated before, it is where no, did I pass it? Okay, so we have the EMA. The EMA shows the exponent moving average more weighted to recent prices. So it kind of lets you know where exactly it's going to go. It has the lines inside there of the 50-day moving average as well as the 200-day moving average. The 200-day moving average is of course the long term. And then the 50-day is the medium term. And then you have, of course, the golden cross where the 50 MA moves above the 200, and then the death cross when the 50 MA moves below the 200 MA, which is bearish. So please make sure you stay aware of what your chart is, what type of indicators you're using to help you along your journey. And then also, let me go over one more thing. Look for some of those signals. So when you see in a golfing candle, let's go to the daily chart. So let's go ahead and go back to the chart, and I can show you guys some of the candles. So like this area right here where it has the like a hammer candle, a little doji candle, and then an upside down hammer, and then it turns red. That is a good indicator of a morning star. It's a good hey, it hit resistance and then decided to go back down the other way because it could not get past this area right here. Which obviously has been resistance for a while. The same thing, you definitely want to look at the very top of the tips. So anytime you see a high top, so it's at this 549.47, then this is also a great, if anything, an even better example of, hey, the stock went up. It could not go up anymore because it hit resistance at that 259.47, and then it went down and went back the other way. If I were to make the screen smaller and go look for 249. Oh, don't tell me that's the high. Okay. We're going to have to redo that one. All right, you guys, we're going to go ahead and go over EMA, which is the moving average, is when the 50 MA goes above the 200 or below the 200. And when you take a look at some of these patterns, no, I'm supposed to start at patterns. I get the EMA. All right, hey you guys, we're about to go ahead and start with the patterns. So here is a great pattern right here where it says 259.47. It decided to go up. It stopped going up. It has no doji coin. It's a doji candle right there. Then it decided to go up. It had the doji candle, and then it went down. It could not go up any further. All other than the fact that one of the reasons why I couldn't go up any further is because that this is their yearly high. This is the 52-week cap. So that's the reason why it did not go up any higher. So once it did decide to start falling, it was going to fall to the next support area, which would be right here, because that's where everything else hit, which is 219.14. And then it tried to go up again, and it got stopped out again by this area. So then when it did, since this already hit this area, the next time that it tried to go through was really actually going to go through the very next time. And when it did, it fell all the way to 168. So it went from 248 all the way to 168. Okay. It hit this support area over here, and then it's trying to work its way up. So it would either stop here because that was the last support area around 228.40. Or since it has been here before, it may try to actually push through, which would be great, especially since 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 earnings coming up. Since earnings is coming up. So definitely keep your eye out on Apple and the consistent transitions and moves that it's making in the market. It has been moving with great power, and definitely on its way up to greatness. We could do one more chart where we take a look at maybe Amazon. I'm trying to do charts that everybody knows. So, Amazon, this, like when you see sideways, you don't want to trade here. You want to wait until there's a breakout. Okay. And then when there is a breakout, then it's like, okay, now it's great for me to go ahead and trade. Even though hey, it's probably going to go up. Why? Because it did not go further than this green candle right here, which is at 151.61. When it came down, it decided to go to 161.38. Once area, it decides to go ahead and make that next move and go up. And once it decides to do that, it's been up ever since. It's going to hit some resistance here because it stopped here last time at 242.52. But basically, you're just going to have to wait it out a little bit. Yes. So it went through the resistance last time. It went to 236. It stopped. So the next time it will probably hit 240. It'll probably get better up here at 242. But so I'm on a weekly chart that I'm showing you. And so this every candle is 1 week. So it stayed here for 3 weeks. It's been here for 2 weeks already. So we'll see how long it takes to actually break through that area. But it has some great uptrend momentum going on. So yes, it is definitely on the uptrend. But as you can see, some of these candles where it went down, it hit resistance, then went back up. But you could tell, hey, it hit this level over here. I'm trying to get that number. So 155.63. So when it hit this area or this zone, you don't want to really go for numbers. You want to really go for zones. When it hit this zone, then you kind of already know this is the weekly chart, remember. So it was here for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. It was here for 12 weeks. For 3 months, it stayed within this area. So most likely that one candle was not going to get past that 12-week period where it stayed within that area. So that's basically how you read a chart, and certain candlesticks that you see that you should definitely run with to help you along your journey to make sure that you are turning all your money that you are getting into wealth.
So now, thank you, Dr. E, for that wonderful breakdown. That was fabulous. Really appreciate that for our listeners and viewers. Did an excellent job. So here goes some more smart trading tips. Use indicators as confirmation, not predictions. You always want to know where you're at. You don't want to guess. Basically, you don't get in the stock market and guess. Do your due diligence. Chart, use your indicators, see where it's going. Use those as confirmation. Let it be known, hey, I think it's going to 155, like she said before, or what? Going down to 129 is going to bounce back. See where you're at in that. Stick to the 2 or 3 favorite tools. Only grab a couple. Don't get 10 different things and try to use them at once. Stick with between 1 and 3 different types of styles and go back and forth. Because if one ain't working, because if one is not working, then you can automatically go to another one. But you don't want to have a whole bunch of them across the board, confuse yourself. Then keep a journal. You got a journal for you. Chalk your entries, exits, and you want to do that. And why? Because you want to know where it hit every day, because that's how you start your moving day averages. What the opens and close, and then we got a whole map behind it. Another video for another day. But that's a way of how to keep track of where the stock market is going. That's how. So.
And remember your why when you're trading. You don't want to overdo it. You definitely want to track, hey, based on the signal that I've seen, I want to enter at this area, and then I want to exit at this area. You want to remember that while you're trading. You do not want to get caught up in greed. You have to remember, hey, I entered this area because I know that it was a great place to jump into. And then I exited this area because I know that, hey, it hit resistance last time it was here, for all my short-term traders. So please make sure you remember those tips while you're trading. And then practice on paper trading. Great platform to do so was Webull, TradingView, and Robinhood. They have paper trading as well. All right, so please comment, like, and subscribe. Talk about in the comments which indicators you actually like to use the most. I know everybody probably has their EMAs up, or they have their Fibonacci lines, or they have their Bollinger Bands. Let me know what is your favorite indicator, and just let us know how it has helped you throughout your trading journey.
Yes. You're always going to need those to help you throughout your trading journey. So let's make sure we're incorporating those into our daily trades.
Exactly. And then please join our community. Join our Patreon or our Discord for weekly chart reviews and early access to any training we have coming up. Or access to, hey, we think that this may be going up or going down, that we can help you understand for educational purposes only, that, hey, okay, now I can understand and see why she bought there, or why he bought there, or why they sold. So yes, so what's coming up next is Intro to Options Made Simple, and then how to analyze a company.
Yeah, those are 2 good ones. So please be prepared for those.
Yeah.